Mr. B, XRP here, and welcome back. Today, actually in this video, I'm going to talk about the market cap multiplier in digital assets. And this is not talked about very much. And it's something that you really need to understand. And I think that I've got a great explanation for you. So I'm going to explain it to you toward the end of this video, how market cap works in digital assets, and why there's such a massive multiplier effect in digital assets when it comes to market cap. Because, well, you'll learn, you'll see when I talk about it. Because a lot of people will say, oh, Bitcoin, when Bitcoin was 300 or 3,000, it can't go to 10,000, it can't go to 100,000. Look at the market cap, look at the market cap. Market cap doesn't matter. And I'm going to explain to you why it doesn't matter. But first, let's look at the pricing. So jumping in, let's see here. Right now, Bitcoin's at 111,223, Ethereum's at 39.68, Tether's holding comfortably at $1, and XRP's at $2.63. So let's look at this first. Watcher Guru posted this. Justin, Binance founder CZ to file defamation lawsuit against anti-crypto U.S. Senator Elizabeth Warren. She does not retract her false statements. So she's been running around telling him that he went to prison for money laundering, and she just can't run around and say whatever she wants to say, especially when you're speaking about CZ Binance, who's a billionaire who can hire all the lawyers he wants to make sure that that she knows when she shouldn't be speaking out of turn. So I'm glad to see him doing that. Dom from EZA had posted this. Many of you asking for my thoughts on the Western Union X Solana announcement. So here they are. Billions are cool, but trillions are cooler. When Western Union handles billions of dollars each year, Ripple is on the way to handling trillions of dollars each year, which, by the way, Brad Garlinghouse mentioned 2 days ago. What do I mean? In the past, Ripple has acquired Hidden Road, which clears $3 trillion annually, G Treasury, which powers trillions of dollars in annual payment volumes across 160 countries, Rail, which is responsible for 10% of all stablecoin-based payment activity globally, and XRP sits at the center of it all. Because Ripple has acquired these companies, they have full control over bringing their trillions onto the XRP ledger versus partnerships that can end at any time. Don't lose sight of the forest for the trees. Trillions, not billions. And I love the way he put that. This was from Paul Barron. And before I play that, I want to play this short clip of this is actually Phil Kwok about the Western Union thing.
So a lot of you have tagged us in posts about the Western Union announcement today saying that they are building stablecoin on Solana. A lot of you are very concerned about this killing XRP's use case as a bridge currency. But in case you hadn't been in the EZA app, that's far from it. XRP as a bridge currency is just one part of XRP's use cases within the ecosystem. And if you've been in the EZA app, you would have known that. So go check it out. And I'd also just personally recommend you check out the Ripple Primer on precisely this topic. You'll understand that this is part of a much bigger Internet of Value play that's going on right now. So check it out in the EZA app and spare yourself the stress.
Yeah, I'm going to start taking a look at that EZA app because these guys are doing so much for the XRP community and for the advancement of the XRP ledger. I think it's time we all start taking a look at it and seeing. And I believe the EZA app is really designed to help developers develop projects on the XRP ledger. But I'm going to dig in and I'll report back. So this was from Paul Barron, and Paul Barron is a great voice in this space. He says JP Morgan's altcoin ETF forecast is wild. XRP $8 billion in inflows. Solana, $6 billion in inflows. Here's why it matters. XRP's real-world utility and cross-border payments plus a clearer regulatory path equals institutional favorite. Solana's fast, but XRP has the banking relationships that TradFi actually wants. We could see $50 billion in a few months. And which brings me to toward the end of this video, I'm going to talk about the market cap multiplier, and I'm going to explain it to you guys in clear language why $8 billion in inflows into XRP could increase the price of XRP or could actually increase the market cap of XRP 5 times, 10 times, 30 times. And I'm going to show you and I'm going to give you an example of it. And this was from Michael Branch. Michael Branch is an OG out there in the XRP community. He said 7 U.S. spot XRP ETF filings are currently under review by the SEC. The agency is expected to make a decision between October 18th and November 14th following its September approval for new generic listing standards for spot crypto ETFs, which brings me to Zach Rector went through all the filings, and thank you, Zach, for doing this. Really, really appreciate it. And listen to this short clip from Zach.
All right, folks, this is breaking news. The XRP ETF issuers updated their S1s earlier this month. They will be going live this week. That's right, folks. 7 spot XRP ETFs live this week. You heard it here first. What I did is I went ahead and I went and read the S1 filings at the SEC website for all 7 of the ETF issuers. And they all provided amendments earlier this month in October. And they included the same language that was used by Canary Capital for their Litecoin and HBAR ETFs that went live today. Same language was used by Bitwise for their Solana staking ETF that went live today. You can go to the SEC website yourself, look at the S1 amendments that were filed earlier this month on October 10th. That 20-day deadline is about to pass. They are expected to go live this week. Folks, share this out far and wide, and I got a full breakdown that just dropped on my YouTube.
Awesome. Thank you, Zach, for doing that. I don't know if the timing is this week. I can't confirm that, but I'm glad that he went in there and saw that they updated the language, because the language is incredibly important. So what I want to do is I'm actually in my blockchain bootcamp program, and I'm going to play a little part about, I'm going to do a part about market cap. I want to explain to you what market cap is in digital assets. And if you find this helpful, if you think this kind of information is helpful to you or could be helpful to a family member or a friend or a colleague who wants to learn about digital assets, go take a look at my site at cryptocoachnick.com. That's cryptocoachnick.com, and they can enroll in my course. But here's my explanation of the market cap multiplier. Here we go.
Okay, let's understand market cap in digital assets, which is one of my favorite subjects. I've heard over the years that a digital asset can't reach a particular price because the market cap would be X, and then I've watched those numbers just get blown out of the water. And let me explain to you why. So market capitalization, or market cap, is a way of measuring the size of an asset, but it works very differently in stocks versus digital assets. Understanding the difference is key to seeing why digital assets can move so dramatically compared to traditional markets. In the stock market, market cap is calculated by multiplying a company's share price by the total number of outstanding shares. For example, if a company has 1 billion shares trading at $50 each, the market cap is $50 billion. This figure reflects ownership in the company and is tied to earnings, assets, and overall performance. Because most shares in a publicly owned company are actively traded, price changes require large amounts of real money flowing in and out. That's why stock market caps move gradually, supported by broad investor demand. Conversely, in digital assets, the calculation looks the same with token price multiplied by the circulating supply. For instance, 100 million tokens traded at $10, the market cap would be $1 billion. But unlike stocks, this number doesn't represent ownership in a business. It's just math. The problem is liquidity. Many tokens are locked or inactive, so only a small portion actually trades. This makes prices extremely sensitive, and one trade can reprice an entire supply. That's why digital asset market caps can jump or crash much faster than stocks, even with relatively little money moving. Let me give you the seashell analogy. Imagine you find 10 seashells and decide that one is worth $10. The market cap for your seashell collection is $100. Later, someone buys just one seashell from you for $100. Now, every seashell is valued at $100, and the market cap jumps to $1,000, even though only $100 really changed hands. This is called the market cap multiplier in digital assets. Here's a fun fact. In 2017, Bitcoin's price jumped from approximately $1,000 to nearly $20,000. but analysts estimate less than $10 billion in actual new money entered during that time. The market cap multiplier effect pushed Bitcoin's market cap by more than $300 billion, which was a 30x increase.
So if you find that to be valuable information and are looking for some more, or you want to help somebody learn about digital assets, cryptocoachnick.com. I'd appreciate it if you refer them to that or check it out yourself. And please hit like and subscribe if you haven't already. Please share my videos with anybody that you think might appreciate them. That's it for this one. I'm not a financial advisor. This video is for entertainment and educational purposes only. Always do your own research. See you next time. Bye-bye.